Good evening and welcome to the turtlefollower.com, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the stock market for the week of Saturday, January 30th, 2016. We had a surprise rate cut by the Japanese on Friday. Looks like that may have triggered the start of maybe a bounce, whether it's the bounce, a bounce, I don't know yet. But you know, it came right at a support area that we would expect it to come at. So we were talking about this earlier, and we've been kind of belaboring this point. But if you look here at the S&P futures, first of all, we've been in this gigantic range for, this is about a year and a half, right? Probably a little bit over a year and a half, but just around a year and a half in this range. And that range is really between 1900 and 2100. All right, round numbers. We like round numbers here. We try not to get too complicated. And you can see that looking at this weekly chart, you have a clear reversal signal. Okay, so you had a move down where the highs of the candle and the lows progressively got lower. All right, so you can see the high was lower than the previous high, which was lower than the previous high, and the low was lower than the previous low, which was lower than the previous low. All right, this week we reversed that trend, and now we had a higher high and a higher low. All right, and that's on the weekly chart. So right there, if you're a pullback trader, that's usually what you're looking for, a confirmation with a move above the previous bar's high, all right, and a close above it is really what you're looking for. So from a weekly standpoint, we have a reversal on the weekly chart, and it came, right at a very key level. You can see that we ultimately did test all the way down to just about 1800 on the futures, but that level really reversed right around 1850. So we haven't had a weekly close below 1850, and we still haven't. All right, so now we know maybe times are changing. Maybe we're starting to move back to the highs, or I shouldn't say to the highs, but at least not move lower. All right. And then we look at the daily chart, and what do we see? Well, same exact thing that we just talked about. We see a clear hold of the 1850 level. We went down and tested the 1800 level, and that provided a huge candle where we reversed from those levels. Okay, so sellers could not sustain the pressure on the bulls there. All right, and that's what really led us to this move higher. So you could see that if you just kind of took your little pencil, and we'll just do that real quick, this new fancy tool that I found. But if you took this little, you could see that now it's kind of starting to do something like this. And I'm looking for it to continue to move higher. All right, we have these lows in place. I'm looking for those to continue to move higher as well. All right, so now, but we have this in place. The next question is, well, where do we go? The first and most obvious point that I would say is probably somewhere around 1970. All right, those were the highs from back here in August. All right, you could see this consolidation here. Then we had another consolidation up here. All right, and now we're back below it. So my question now is, do we consolidate down here? All right, you can see that the 50-day moving average is pointing to the downside. Let's get that fancy tool out again. All right, pointing to the downside. I don't know what any of this means, these things. Oh boy. Okay. But ultimately, I think from a short-term perspective, I would not be surprised to see us go ahead and actually move up into this range. All right, I would not be surprised to see us come up into this 1970 area, meet this declining 50-day moving average, and then maybe bounce like this, then bounce back up, and then break out. All right, but again, the market's a little finicky. Who knows what it's going to do? All right, for us, we're just going one step at a time. So I would say going forward on the S&P, you can look at the SPX as well. Okay, let's take a look at the SPX. Let's remove all these drawings that we have in here. It's a very similar situation. All right, here was that consolidation. Here was the other one. and the level that splits those two. So previous support becomes new resistance, previous resistance becomes new support. All right, you can see that's what happened here. We had resistance, broke above it, had support, broke below it. Now I think if we come back up into that level, that 2000 level is going to be pretty important. And if we look at the SPY, very similar situation right in here at the 200 level. All right, so those are the three areas I think you have to be of concern. The first one being the lows. Let's go back to the ES. All right, the lows that were tested. All right, so that would be 1800, 1810. I think if we get down there again, we have a lot bigger problems than, you know, worrying about where the market's headed. It's headed lower. So if we go down and test that level again, I think, you know, we're in some trouble here, and we could see a significant pullback. The other level, 1850, should not get breached again. Okay, shouldn't even come close to it. We may see a little bit of a pullback. I wouldn't be surprised to see a little bit of a pullback, especially after being up 50 handles on Friday. Wouldn't be surprised to see a pullback. But then the more important level, I think, is 1970 to the 2000 area. All right, that's the area that what happens when we get there. Do we reverse right back? Do we consolidate a little bit, build up enough steam to break out, and maybe break out above the 50-day moving average again? Who knows? All right, let's look at the NASDAQ real quick. All right, again, we'll clear off all of these drawings here. But essentially, you can see that the NASDAQ also held very key levels. Okay, the 4,000 level. All right, then what happened? Well, it consolidated just a little bit, you know, for a couple weeks, and now it looks like we're breaking out. All right, it looks like a clear-cut reversal, and you have that same reversal pattern on the weekly chart. So I would say, again, what level do we look for in that? I would say that level is probably somewhere in the 4370, 4350 area. Okay, those levels I think are important, as are the levels down here. For the NASDAQ, I would say you don't want to see us trade back below 4100. More importantly, what happens when we get to 4330, 4350, 4370? You know, do we reverse? Do we hold? Similar situation to the S&P. Again, clear off all of these drawings that we have. Okay, and here you can see the same. It's across all the index, all the indices. All right, it's just a clear-cut pattern here. Again, wouldn't expect to see us trade back. This is the Dow. I apologize. This is the Dow. Wouldn't expect to see the Dow back below 15,700. If we got down to 15,300, like we were earlier last week, then I think that's a huge issue. And again, 16,700, 17,000, that's the level. What happens when we get there? All right, and the last but not least, the Russell, completely broken. All right, absolutely broken, no doubt about it. The weakest of the major indices that we follow. You can see here that the support area that should have held was right around 1100, 1070, right in that area. Didn't even come close. That was right in here. All right, broke right back through it. Again, now we're consolidating. I think this puts us into more of a sell the rips kind of rally here in the Russell. You can see decisively pointed lower. Not really much to like in the Russell. So I would say at this point, you know, this looks to me like the easiest one that can probably go ahead and roll over. The other ones, you know, again, we're in these larger ranges that, again, it depends really how we proceed. Do we you know, turn around and just blow right past through these levels like we did the last time? I would be more inclined to see maybe another test of this 1850 area and then a pullback, or I'm sorry, and then a breakout. But again, it all depends on how this plays out. Looking at the sectors, all right, this is the materials sector. Okay, you don't want anything to do with the materials sector unless you're looking to short it. that one just continues to make lower highs and lower lows. Same with the XLE. All right, lower highs, lower lows. Just not really ones that you want to look to get long any names in. The XLF, the financial sector. All right, again, breaking down some key resistance above, right around the 22 area. Again, just not something I'm looking to get myself overweight in. And you know, our watch list this week for the members out there, our watch list this week, you know, kind of leans that way. We have very few financial names. We have a lot of utility names, a lot of staples names, and as you know, we put on a bunch of staples names just recently as Friday. All right, we had a bunch of names that we just put on the portfolio. So looking at those, I would say I'm just staying away from XLI. Maybe it's a case of the bottom of a sideways channel here, but again, a lot of overhead resistance, trend line pointing lower. Okay, you got the 50-day above you. All right, so again, just not conducive to long trades. XLK, similar to the XLI, where downtrend is in place. You have a nice pop. Is it a sell the rips kind of pop? All right, none of these indices or sector charts that I'm looking at here tell me, hey, you know what, we're out of the woods. I don't think we're anywhere near out of the woods. I just think that these are some highly oversold names that needed to blow off some steam, and they use that news from Friday to do so. Here, the XLP, the consumer staples. All right, again, they've been the strongest of the bunch, and it shows. They're almost at new highs. Over 51 is new highs, but looking at the weekly chart, what do we have? All right, we just have a sideways channel that's been in place for the better part of a year and a half. All right, the XLU, similar situation. We just talked about that. All right, but look at where we are. Again, sideways channel. All right, so when you look at these, you have to kind of frame your expectations of what you're thinking is going to happen for the upcoming week. Now, we talked about earlier that obviously we look for some more buying pressure to push us up to that those resistance points on the index charts. But now when you go through these sector charts, the question really becomes, well, are any of these sectors leading? And I would say absolutely not. The only one that I've liked so far is the XLU or the XLP. And those are really almost at their resistance point. So what happens when they hit the resistance? Well, now the stocks that everybody was piling into are now at resistance, and a lot of money managers may look to flip them and sell them. And when that happens, what happens to the other charts? All right, so you got to think about it as a rotational thing, where it looks like from everything that we're looking at here, this could just be setting everybody up for a continued move lower, and we're going to just play it that way. Obviously, there's some charts that are going to be out there, and we're going to go over a few for the members that are setting up some nice looking charts. There's some breakouts out there. One in particular, PPL. Okay, breaking out, no doubt about it. All right, breaking out, problem comes up, we have earnings. All right, so what happens? We're not taking this position. All right, but it's out there. I'm going to go over it with the members. We're not taking the position because earnings are coming up. But also, what exactly happens when those markets and these leading sectors hit their resistance points? And that's where I think a lot of things are going to come to fruition a little bit. I think, as I said, short term, I think we see a little bit further advance in the markets. I think we can still look to put on some long trades, but maybe intermediate term, maybe out a month or so, I think that maybe we're kind of setting ourselves up to roll over and maybe even potentially test those levels that I didn't want to really test. So for right now, I don't think this is push all your money into the middle of the table type of situation. Definitely let's go about it methodically. Let's understand the risks that are involved here, and cash is a position. Okay, so if you're not comfortable trading, if you're not comfortable shorting, like I said, cash is a position, and it's perfectly fine to be in cash. We're not looking to buy things cheap. We want to only be buying things when they're moving higher. All right, so that's it for this weekend, the stock market outlook video that we put out. Any questions or comments, let me know in the comment section below. Of course, if you like it, make sure you follow me on Twitter, StockTwits, wherever it may be, and share it with your friends. Other than that, members, head on over to the weekend update for each account that we have, and we'll talk to you soon. Take care.